Hi everybody, this is Osprey from MyChartCoach.com. And in this video, we're going to take a look at some of the top plays of the day. So yeah, these were some of the big winners. Yeah, everything's about Bitcoin. I am going to do a Bitcoin video later tonight. So yeah, keep an eye out for that. But right now we're concentrating on the equities. And here we've got MRNS up 39% today. So congrats everybody. This was a breakout above resistance play. If you notice here, it had been trading in this tight channel with making a double top here at this 775 level, and then today there was a close above resistance. So that close above resistance is signaling more upside potential. So as long as MRNS is holding above the $8 level, you want to see it stay above that 775 $8 level, it should break out higher. So keep an eye on MRNS tomorrow. We will be charting it, and we will be looking for the next key resistance levels to break. We'll have to look at the weekly chart. I should have put that up here for you. If you could see here, there's a big volume spike. There was a PSAR bull flip. There's a MACD bull cross on both time frames. So the chart is all signaling that this is the next push higher. Notice that it bounced off the 50-day simple moving average. So keep an eye on MRNS for more follow through tomorrow. Okay, take a look at GALT. GALT. It finally had the dead cat bounce today. It closed up 30%. So congrats everybody. You know, it was setting up here. This is the 15-minute chart that I want to show you. Notice that it had a big gap down. This is the top of the gap, and this is the bottom of the gap. And so it's been working on filling the gap. The gap is the space between these two candles. And so notice how the candles have worked their way all the way up to right here. This is the top so far. It's not quite filled. You know, to fill this gap, the share price needs to hit 240 or so. That's where I have it marked on this chart. So the 300 simple moving average in the 15-minute chart is going to be the big level to break if it can get above the key resistance level that failed to break today. We did put out alerts in our chat, so everybody, I recommend coming and checking out our chat. It was a premium alert. People ask about our chat and what's the difference with the regular channels. You notice we have channels down here. We have a marijuana chat, over-the-counter chat, crypto chat, options chat, and a swing chat, day trading chat. We put out alerts, and then we have the premium channel where we really put in-depth information. And you can see here, this is from the market closed. These are all alerts on marijuana sector plays, big board plays. We're doing options. We're breaking it down. We're putting out due diligence along with the technical analysis, and then we're teaching people how to trade at the same time. So I highly recommend coming in and checking it out. If you really want to learn how to trade using charts and technical analysis, this is the best place to be. It's a really good learning environment. Everybody's super friendly, and yeah, it's a great place to be. Okay, so yeah, so check that out, please. If you look here at the, and I will put the link below the video on YouTube. And so it has to break above this 218 level. Now that's the big level for GALT to break. It has to get above the 200 simple moving average. If it fails to get above this level, that's going to signal that it's going to consolidate. Right now it is holding the 100 simple moving average at 184 and the middle Bollinger Band at 196. Those levels need to hold. If you see it drop below that level tomorrow, that will be a signal that it is consolidating. If it can push through that 200, then look for a gap fill and a possible climax at that 240 level. You know, it's going to have to bust above that gap fill level in order to head higher. Okay, let's look at WAC. Really nice move today. Congrats, everyone. We were on this one early at the start of the run. So congrats, everybody that's been following, and I really appreciate that. Thank you so much. We are at 66 on our side, so there still is some room to run until the overbought levels. This was, you know, alerted actually last week, okay, when it closed above the middle Bollinger Band. We had it on our radar, and we had been looking for, you know, and we put out multiple alerts, and I'm sure you heard them. We were looking for a break above the gold line, which was the 100-day simple moving average, and that happened yesterday, and so that was the signal that the stock was heating up. If you notice back here in September, it had closed above, it had broken above intraday, but it closed below, and so that the close above yesterday, that was what we call the bull signal, the signal that the share price wants to head higher, that the stock wants to keep running. And so as long as that 100-day simple moving average held, it signaled more upside potential. And so now we have the candles pushing above the upper Bollinger Band. Today's candle is well above the upper Bollinger Band. So if the candles do work back into the bands, Then you're looking at EMA4 as the key support level to hold. And now to the upside, the next simple moving average level to break is the 200-day simple moving average at 92. So that is going to be the target if it can bust through the high close horizontal resistance level, which is the closing price right here on the 20th of September. So it has to get above the 73 resistance level. If it busts through that, it could make a run up there to dollar land. You are going to have some resistance here at 82, or a run up to the 200-day simple moving average. And above the 200-day simple moving average, you have the 300-day simple moving average way up at 226. If you look here at the 15-minute chart, this is the one we've been working on in our chat, and this is what we do during the trading day is we put out alerts on the next key levels to break, and we pick certain stocks to track throughout the day, and WAC was one of them that we were working on yesterday and today, and you could see it kept breaking above high close resistance, and so that kept signaling more upside potential. Each time it got above the key resistance level, the previous high close, it broke out higher. And so notice it did that again here up to 78, and then it pulled back, but notice it failed to make another high above 78. And not only that, it formed what looks to me like a head and shoulders pattern. So you have a left shoulder here, a head right here, and then a right shoulder right here. So to me, that has that head and shoulders pattern. Now this is the 15-minute chart, and it could break away from that pattern. All it has to do is break above 78 and make a new high. Now if it drops below the neckline of this pattern, which is going to be lined up with the 50 simple moving average currently at 68. So notice how the candles are lined up right here. This is looking like the classic head and shoulders. If it drops below 68, that's going to signal downside risk, and you could see a drop all the way down to 56. So to the upside, it has to get above 72, and then it has to get above 78, and that'll signal it wants to head higher. Okay, let's look at DPW. Yeah, this stock, it's made the big move, and then it consolidated sideways. And the interesting thing is, while the candles had been working sideways, even though it was all the way up at 520 and it pulled all the way back, it looked really nasty yesterday with the big percentage gain that it was, or the big percentage that it was down. But it was really, this chart is still really strong. The candle today closed above EMA4 at 307. As long as that level is holding, it's still a very strong swing trade uptrending chart. It has a very nice chart to it. If it closes below EMA4, that's going to be your clue that it's starting to cool down. Notice there hasn't been a close below EMA4 since back here on November 21st. So a close below that will be a bearish change in trend, and that's what we're looking for, to signal downside. If it's still holding, that signals that it could head higher. Now if it does pull back and close below EMA4, you could see a drop down here. There's a gap between these two candles, and a drop down below $2 would fill that gap. To the upside, in order to break out higher, it has to break above high close horizontal resistance. And notice how that was the open today, right there, and that was the closing price on the 5th. And so it needs to break above that level. If it closes above that level, that signals it wants to head higher. If it fails to break that level, it's going to signal a temporary top. Okay, let's look at VKTX. Okay, this stock is on breakout mode, breaking out. So congrats everyone. This has been a really nice strong uptrend. It was consolidating sideways, and then today it made the bullish move higher. You can see RSI is still below 70. This stock does head higher above the 70 on RSI in the power zone, and in the power zone on Fasto. Notice the big move that it made, down here after it broke above the moving averages. It had that really long run, and RSI was above 70 the entire time. So this chart here is looking like it could be starting because it's a new push higher. Because notice here on ADX, you have the green line plus DI just broke above ADX, the black line, and minus DI, the red line. They're just heating up here. And then you have down here, you have a bullish crossover on MACD on the 12, 26, and 9 that just happened today, and a bullish crossover on the 8, 13, and 5. And so those are all signals of a possible start of a new push higher. The other promising thing is the giant volume. Notice how much volume is behind this move. Yesterday, they had the black candle form, but the chart still stayed bullish with above the middle Bollinger Band. Sometimes you see this pattern where it pulls back, and that's for loading. If the stock is still strong and it's in a good uptrend, and you see that pattern, sometimes it's for loading. Today that was confirmed with the push higher. And so what you want to do when a stock is breaking out and making new 52-week highs is look at a longer time frame. And so if you look at this weekly chart here, you can see VKTX came down, bottomed, down here in 2016, and then it came back and bottomed again, and it formed what we call a double bottom. And so after forming the double bottom down here in August, July and August, it took off running, and it's been very bullish. If you noticed here, when it went once, for a longer term swing trade, once the candles get above that middle Bollinger Band, it's heating up for a new uptrend, and then when they get above the 50 weeks moving average, that really signals it's a good setup. And notice you could have been riding this ever since it got above the middle Bollinger Band and the 50-week simple moving average. So it's been a multi-month uptrend since September, and this is, we talk about this a lot. People are always saying, I've got a 9 to 5, I can't look at my computer all day, I just need a stock I can stick some money in and just let it ride for a little while. Well, this is the kind of chart that you're looking for. You're looking for a really strong chart on the weekly chart, a very strong uptrend. As long as that pink line is holding, every single close since back here in basically August has been above EMA 4 on this chart. So once it finally closes below EMA 4 at 322, that's your signal the chart's going down. If you're a long-term swing trader or quote-unquote investor, then you just keep riding as long as support's holding. It could keep pushing higher. Now, right now, the big level to close above for the week is this closing price from January, of 2016. Notice it's busting above that level today. That's signaling big upside potential. Notice that before that, it was a big free fall. It was dropping hard. So it's not like there was a lot of consolidation in these levels above. It could really get moving. You have to go all the way up here to see where there's some strong consolidation in the sixes. So yeah, so this is going to be a really big move if VKTX can stay above that 350 resistance zone. Okay, look at AVGR. The stock is heating up. It has RSI at 52, Fasto at 62. So that means they both are in the bull zone with room to run. Notice there was just a bull cross on ADX with plus DI crossing ADX to the upside. There was a bullish volume spike today. Okay, so this is one of those head fake type plays that you have to be careful of, because notice that each one of these green volume bars where it was like, okay, it's heating up, it's making a move, and each time it was a fake, a head fake. And so what we're doing is just stalking the play here. You're just waiting. You could jump in here if that was your strategy on the break above the middle Bollinger Band, because that is a good move above the 2450. It has to hold that level. As long as it stays above 245, it's still in play. It could possibly start a new uptrend, and that's what we're looking for here. And so if it can hold that level, then it could run up here to the 50-day simple moving average at 30, and then the 100-day simple moving average at 32. Those are the next two big levels to break. If it can close above the 100-day simple moving average, it could get running. So what happened here is it had a big gap up open, and then it pulled all the way back, and then finally on this candle right here, this red candle on the 15th, it filled the gap. Notice how it broke below the bottom level. This is what we talk about, a downward gap fill. This is why we don't like gaps. And notice it had the black candle as well. So it was like you were totally needed to get out on this candle. And if you didn't, notice how it came all the way down and filled the gap. That's the problem in Pennyland. Gaps get filled. Unlike maybe like an Amazon or an Apple, they could keep running without filling a gap. Most penny stocks fill gaps. And so if this can get above 32 and the 100-day simple moving average, it could break out higher. So keep an eye on it. Okay, let's look at INFI. It's up 15%. We want to see RSI get above 50. Fasto here is at 73. Notice that plus DI is heating up here. It just crossed over ADX. So this is a chart that is setting up. Okay, so we're watching this, and we're looking for a potential break above the middle Bollinger Band and the 50-day simple moving average. If we can get a close above 208, if it looks like it's going to close above both these levels, that's going to be the bull signal that it's heating up. And then as long as it stays above those levels, it's in play. Notice back here, it was below, the 50-day simple moving average. It got above, and that's when it heated up, and then it started breaking the moving averages and really took off. Well, right now, it's above all the moving averages except the middle Bollinger Band, which is also the 20-day simple moving average, and the 50-day simple moving average. So if it gets above 208, it will be above all the moving averages on the chart, and that could lead to a potential run higher. You have the high close here, it could get going. So keep an eye on it. We're going to see if it can heat up. And then you have MYO here. This is one of those bottom bounce plays. It came down and filled the gap. It had the nasty drop. Okay, another gap fill example. Notice there was a gap up, came down, it filled the gap on this candle here. And then it kept coming down. It failed to hold the double bottom support level. Nobody ever likes to see that if you're a bull. And notice how it actually gapped below that level. So there was a gap between this candle and this candle, and so that gap filled yesterday. And sometimes when the gap fills, it will stall out. Notice how the close was right at the top of the gap level, but it did gap up open today, and it headed higher. And now it looks like there is a small gap between these two candles. So, with that inverted hammer there, that's called a shooting star. And so that is a, I'm not sure, I didn't check to see if a bearish reversal or bullish reversal pattern formed here. This is a really odd pattern with these candles. But anytime you're cruising in an uptrend, there's multiple green volume bars, white candles in a row, and then you see a gap up open with a inverted hammer or a doji or that many times is going to signal a potential pullback. And so we'll see if that happens here. It is at the bottom of the chart. Sometimes they pull it back for loading, but it looks like that little gap down there is going to fill down to EMA 8 at 295. And so for this stock to stay in play, it has to stay above 283. That's the EMA 4, the pink line. And so it needs to hold these levels, and then it has to break above EMA 8 or 13 at 326. We put out alerts today that was the key level to break, and notice how it closed right below that level. If it can get above 326, then it could run up to the next targets, which are the middle Bollinger Band and the 50-day simple moving average up here, and the 4 to 426 range. If it fails to get above that level, it could drop back below. This will be a risk to hold if it's forming candles below EMAs 4 and 8. And then take a look at tops here. So we have tops trying to bounce. Everybody loves to play this ticker. Notice how, once again, you had the black candle. That was your signal to go to the sidelines. Nothing but pain and suffering for everybody that held. It's just been on a nasty downtrend. Notice it got below EMA 4 on this pink line. And every single day during this downtrend, since this close above on the 7th of November, have been below the pink line every single freaking day. And then today finally closed above. So that is our bull signal. Okay, so that's our signal that it finally today it's in play. It did have that big run intraday, and like tops loves to do, it gave back the gains. It closed right below the next key resistance level, EMA 8 at 43. I believe it was moving in after hours trading. All the shipping sector stocks were moving, and so it looks like they're going to be in play tomorrow. Just be careful. Bad news always comes out after hours, and they love to give back the gains. So you always want to be trying to lock them in on these kind of plays if you're trading them. They're just trades. They're just dates. They're quick. This is not something that you want to play with because you could get burned if you get caught holding the bag. And so if it gets above EMA 8 tomorrow, that's going to signal that it's in play. And then the big level is going to be 60 cents. I know it's far from 43, but if it gets above 60, then it could really get running. And that's the big level. If it gets above the 50-day simple moving average, there was big volume behind the move. But when you have a big volume spike like that, and then you have here, I'll show you real quick. When you have that type of move, and then the share price pulls back and it forms a long upper wick on the candle, usually you get a spike down on accumulation distribution, and so we should see that here. Let's check it out. So yeah, so notice how you have accumulation distribution spiking down, and you have a big spike down on CMF. And so even though there was a big green volume bar and the share price traded up on the day, it was up 15%. That's a sign of dilution. That's what Tops does. They sell shares. That's how they pay the bills and buy all those boats. They got a big collection. Okay, let's look at GLBS. It's up 7% today. It's heating up. I kept seeing it on the ticker. Cruising by. It was moving after hours tonight. People love the stock. They love to trade it because it can return nice gains if you can get a good entry point. But you just have to be careful. Look at all the gaps and spaces and black candles and danger on the chart. What needs to happen here with the close above EMA 4, candles right in above the middle Bollinger Band. It's currently in an uptrend. It closed above the key resistance level. A black candle, this is the close. At the bottom of a black candle is the close. It means the stock was up on the day but closed below the open. So the close above high close resistance, which was this level right here, that does signal more upside, and it was running in after hours. And so the big thing on this stock is what you want to see is a break above this 155 zone, and then it could run up here. The closing price on the 7th, which is now lined up with the 200-day simple moving average at 189. Those are the targets. If it can stay above 135 and get above 155, it could run up to that 189.90 range. Okay, and then let's look at DCIX. Okay, so this one is setting up. This is another shipper, and I can cover more of these shipping sector stocks, and we will be following them all and looking at all the charts, and we'll let you know if we see more that are heating up. So please follow along. If you look here, it's hitting the green line again, which is the 50-day simple moving average. All right, so this is the third time that it's trying to bounce off that level. I did see it was getting some action after hours. What you want to see if you're a bull is a move above the middle Bollinger Band at 780. So if it gets above 70, that's going to signal that it's back in play and that it could head higher. You know, it faked out on the 27th, it got above, but then it pulled back down. We want to see a move above that and a close above, and then it turn into support, and that's when a new uptrend can begin. Now, the green line, the 50-day simple moving average, has been holding the whole time, and it closed right at that level. So $6 is the stop loss level. It's going to be a major risk to hold if it fails to hold 6. The downside risk is you have the lower Bollinger Band is the next support level, which is all the way down at 489, which that's a big drop, and then you have the gap down here. There's a gap that, as we were talking before, the gaps get filled. Even though this is really a penny stock, even though it hit 20, you know, remember, this is DCIX. Okay, just keep that in mind. And even though they did a reverse split and they got the share price all high again, it's really just a penny stock, and gaps get filled. And so if it fails to get above that middle Bollinger Band, this gap fill becomes the target. And then you look for a potential reload off the bottom of the gap if it gets hit all the way down here at 350. So that's the downside risk. Fail to hold 6 and 350s on deck. Get above 780 and it could run past 10. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check us out in our chat. You know, it's a really good tool, a mobile app. You can get stock alerts, information, and you can actually learn how to trade using the charts. I mean, we do a good job of explaining all the strategies using the charts. And the key is that we're trying to teach you how to trade, teach you how to fish on your own. So every day you can find your own plays and be successful. That's what it's really all about, is just trying to share and help one another. Okay, so yeah, thank you. Enjoy this video.